A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a dramatic escalation of his ongoing feud with the Federal Reserve, President Donald Trump has once again called for the resignation of Jerome Powell, the chair of the central bank. This latest demand comes amid rising tensions over interest rate policies that Trump argues are stifling economic growth. On Wednesday, Trump took to his social media platform, Truth Social, to express his frustration, stating that Powell should resign immediately and criticizing him for not lowering interest rates quickly enough. The president's remarks follow a statement from Bill Pulte, the director of the Federal Housing Finance Agency, who suggested that Congress should investigate Powell for alleged political bias and deceptive testimony. Regarding renovations at the Federal Reserve's headquarters in Washington, D.C., Trump's call for Powell's resignation is not an isolated incident. It reflects a pattern of public criticism aimed at the Fed chair since Trump took office in January. The president has consistently blamed Powell for the central bank's cautious approach to interest rate cuts, arguing that it is hindering economic progress. Currently, the benchmark interest rate is set at a range of 4.25% to 4.5%, a level Trump believes is too high. In his remarks, Trump pointed to the potential benefits of lower interest rates, which he argues could stimulate borrowing and, subsequently, economic growth. However, such cuts also risk increasing inflation, a concern that central banks typically prioritize. The president's criticism comes at a time when inflation rates are a hot topic in the U.S. economy, with many pointing to Trump's sweeping tariffs as a contributing factor. In a recent panel discussion at the European Central Bank Forum in Portugal, Powell remarked that the Fed had adopted a wait-and-see approach due to the uncertainty surrounding Trump's tariffs, which have created upward pressure on prices. In effect, we went on hold when we saw the size of the tariffs, Powell stated, explaining the Fed's cautious stance on rate cuts. Trump, however, has dismissed concerns about inflation, insisting that the Fed's policies are detrimental to American economic interests. The ongoing clash between Trump and Powell raises questions about the independence of the Federal Reserve, a critical institution designed to operate free from political pressure. Under U.S. federal law, the president can only fire the Fed chair for cause, a stipulation that has historically protected the central bank from political interference. Despite this, Trump has continued to express his dissatisfaction with Powell's leadership, even suggesting that he has 2 or 3 candidates in mind to replace him. This contentious relationship has drawn significant attention, with some experts warning that it could undermine the credibility of the Federal Reserve. As the economic landscape continues to evolve, the stakes are high for both the Trump administration and the central bank. With the deadline for many of Trump's tariffs approaching, the pressure is mounting for both sides to navigate these tumultuous waters carefully. Trump's latest comments about Powell reflect a broader strategy of leveraging public opinion to influence economic policy, a tactic that has become increasingly common in his administration. As we move forward, the implications of this ongoing conflict could have far-reaching effects on the U.S. economy and its financial stability. The coming weeks will be critical as the president and the Federal Reserve grapple with these issues, and the potential for significant changes in interest rate policy looms on the horizon. In the meantime, the American public watches closely, as the decisions made by both Trump and Powell will undoubtedly impact their financial futures. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.